Okay, I think we're recording. Yeah, we are. All right, cool. So yeah, this is on the indices page for the dashboard. Just running through like the actual page and like what each indicator is like showing versus like say option analytics, sex positioning, stuff like that. So one of the things with this page that's different is that these gex, dex, varna, charm, vex skew, expected move numbers, like they're across the board. So it's taking account of like all the major ETFs, like big tech and so on, and then combining the numbers together to give you like a total view of what the total like market view is, and then same for Dex, Varna, Charm, Vex Skew, and then the expected move. So you have like an overall like just view in general of like how the market is positioned. That that's basically like what we've done here. Then you have a couple of other charts. So below, and this is likely to change. Like I said, this is a beta page. We're gonna probably change this a bunch more. You have like the net gamma like intraday flows. So basically like every 5 minutes, like this will update and show you like how positioning is moving. So like let's say you're looking at it intraday, positioning is pulling down, and then like if you look here, like going into 1 to 110, we basically had the the market start to like pull down at the exact same time. Moving up into the open, we found a bit of a bottom, we started pulling up again, and then like from here onward it was like a slow drift down, and then from that point we then actually did start to continue sell. So there was like a brief pop up, and then after that, like it was just sell, which lines up like pretty well with this. So I'd recommend if you are like trying to use this to like trade uh, with what you'd want to do is like just make sure that you're seeing like direction. If it's going against price, then that's worth like noting like that indicates a reversal, and then when it's going with price, then see like that's like an indication of continuation type thing, because then you're getting an idea of like total flow, right? Like the mechanics of people buying a position. Like if someone buys a position and says I'm going long a put, uh, and then that puts in the money, are they rolling out or not? Like that's what this is giving you an idea of. Like, is there further momentum to downside positioning, yes or no type thing. One thing that is like really interesting going into the close, um, is this like pickup, right? So us like having this like move right up is pretty interesting. That basically like lines up with um, what we have been seeing in terms of positioning starting to like pull up, and then as positioning pulls up, you get a rebound in price. So that relatively like lines up with like what happened intraday today as well. If we go to Jackson Hole, which was yesterday, like from a positioning standpoint, one thing that was like interesting there is we basically got like a major decrease in positioning relative to other days, right? Like that we drew down to around like what 76 going into today versus the day prior where we were at -5. um, anything else to look at? Nothing else there. So the next part is just looking at peak positioning overall. Like how do you trade with this stuff, right? So you've got your positive positioning, and then you've got your negative positioning. What's like really simple, like from these charts, is like okay. puts our deep negative calls maybe like deep positive, but in this case like we're obviously skewed to the negative side. Looking at this strike 3762, this basically like held as a floor. Like we couldn't get close to it, and then the reason for that is like we also had another position above and if I zoom out, because I know people say like they can't see like the annotations and whatnot, when you zoom out you can then see all of the strikes at the top. But one of the things that you can also do is just zoom in, just hover over the actual lines to give you the numbers as you go along. So one thing that we saw over here was this 3762, you then had 3812, 3712, and then this other position, where is it? There was a 3772 as well. Yeah, there we go. Get rid of this one, get rid of this one. Oh, please. Here's the other level right here, this blue one. So this 3, is that, no, it's a 3913. Damn. 3762, there's your 3772. Yeah, here we go. So this position, whilst being nowhere near as negative as this 3762, it's like basically stacked, like you've got a 10-point difference. We kept tapping 3772 today on ES, and every single time we tried to like break below, it was just met by like a heavy bid, pretty much. It made it difficult to like push us below meaningfully from that level. And then like the mechanics of it, which a lot of you like listening on Discord like kind of already understand, but for viewers, what's really like simple about it is like, just think of it like this: market makers, when they are short a position, i.e. they have sold a call or a put, they have to hedge with you, right? So in this situation, like what we're saying is there's a crowded trade at this particular strike. When people have said position in the money, they have two options: they roll out, or alternatively they just sell and they close that position. If they all decide to sell, or enough people just want to sell and they don't want to roll out their position, they don't want to be as aggressive, then market makers are going to buy back what they sold to hedge that book. Now the other part is like when you've got this stacking effect, they've already sold like quite heavily to hedge with respect to like this position as well, right? Now if we can't break this level, and those options are shorter dated or whatnot, and you can corroborate that with the peak gamma positioning on the options analytics chart for SPY. But what we also know is if those positions are like short dated as well, then like theta's playing against those positions, that delta decay will like take hold, and then market makers like throughout the day will be dynamically like re-hedging their book as a result and buying back in this scenario. And then for the reverse, like the same thing would happen like on the call side, right? So like if we had positive positioning and it was super stacked, like we had at 4314 a while back, then you'd end up with the same kind of issue. Yeah, so then like the next part is just looking at skew. So combining these four together is like where it gets pretty powerful. We've got really simple levels. So for skew, like based on our back test, and this isn't typical skew, we didn't use that because personally, like, yeah, it's informative, but we like ran our own metric, which we have also called skew, but I mean, really, it's not skew in the generic sense, and we use that to like identify whether or not one side of the chain is like more expensive or not, like where demand is kind of like creeping in, and it's simple. Like if you look for a -50 or a +50, +50 means sell, -50 means buy. Um, and the concept is simple. You're essentially looking for like where demand is heavy on like which side of the the tail, right? Like whether it's on the call side or it's on the put side. So as you can see over here, like at then this is GMT as well. Like if you're looking at this at 4 o'clock, 3 o'clock, like our time, which would be what 5 hours back. So what, like 10 for you guys, something like that. Um, we had a deep negative positioning. When we opened, we couldn't actually like really sell. Uh, the moment this lifted up, like 2 hours in, that's when we did get like much more weakness, and then we did start to drag down. Um, Another example of this was the 22nd. So just before the open, we had a major deep skew on Qs, -377, which is insane. As soon as like you see something like that, you kind of want to favor the the upside, and then the same if it was blown out on the positive side too. We then also have a bunch of stuff on like net delta, gamma, charm, and varna, but I think they're quite detailed, so we'll probably like run through those in another video, just covering those in particular and like how you combine these to like identify a trade or where a trade will go on on the futures, because like a lot of this page in particular is like geared towards trading futures. Cool. I'll leave that one there then.